You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion, delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. 1990. And of course, we are celebrating today. We celebrate every day on Ron Siegel Radio. National School Librarian Day.
It is what it is.
I don't know too many people that go to the library anymore. Although, a few years back when my kids were a little younger, we were doing everything on the internet, but they did go to the library, and lo and behold, they actually found some tutors there. So that was kind of different. National Walk Around Things Day. Vitamin C Day. Am I considered a news person? I don't think, maybe 50-50. I think commentary, but National Hug a News Person Day. Okay. Jeep 4x4 Day. My wife has a Jeep. I'm not sure a Jeep Grand Cherokee counts as a Jeep. It does go 4x4. It does have Jeep in the name. That's about the extent of it. It's not really off-roading. It's just a little different than that. But having beaten anorexia, you know which way I'm going. Chicken Cordon Bleu Day. I like chicken cordon bleu. Although, you look at the food. So this weekend, Josh, I didn't even tell you this. You're going to love this whole story. So, I get out running around the community, seeing what's going on in the world. Well, last year, a friend and his girlfriend and Mindy and I, my wife, we decided that we're going to go out and do a survey. We blew it this year. We didn't do it as good a job. But what was our survey? What was our analysis? We were going to go to all of the various churches around here. I know I'm a Jewish guy, but when it comes to food, that's different. We went to the churches to check out the fish fries. What are the different fish fries? Friday night, they have fish fry during Lent, I think is why they're doing it. They're always raising money for something. So I like going to different charity events. So we went to the fish fry Friday night. Now, I don't know why, but my friend's girlfriend, she wins every one of the raffles there. She did last year too. And she buys the tickets and puts them in the raffle basket, and she ends up winning. Last year, I think she won 8 of them. At 8 out of 10, she didn't put any ticket in those other 2. This year, she wins like 3 or 4. I guess, I don't know. But fish fry. So think about this. We're eating this fish that I don't know if it's really fried there or if it's just that they buy it somewhere and stick it in a microwave or how they do it at these fish fries. A lot of people. Paper plates. I don't know, maybe Vandekamp fish, some, Ore-Ida French fries. And then on Saturday night, we went to a spectacular party. I'm not supposed to say that I was there. Or what? I guess I could say I was there, but maybe I shouldn't be saying what it was all about. But we went to a spectacular party at a restaurant called Steak and Bourbon, I think is the name of it. Bourbon and Steak. I guess that for someone like me, that might be way to go with it. Bourbon and Steak is in Newport Beach or Laguna Beach. Sorry, I didn't drink enough that I don't remember where I was. It was spectacular. Waldorf Astoria. Bourbon and Steak is the name of the restaurant at the Waldorf Astoria in Laguna Beach. Wow, talk about a meal. It's beyond. Well, obviously, if you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 video feed, you can tell that I'm just a little bit oversized, maybe a lot oversized. Okay, but they had a tomahawk steak out of this world. Chicken, I think it was fried, but they stick the whole chicken in there and fry the whole chicken. They don't break it up in pieces, and it's not breaded. Oh, unbelievable. Side dishes, truffle mac and cheese. I might have to go back there. Truffle mac and cheese, amazing wines, bourbons. I'm not a big bourbon drinker, but I did taste some of them. Beyond belief. So you go from fish fry on paper plates to the ultimate gourmet restaurant at the Waldorf Astoria in Dana Point or Laguna Beach. Where the heck is the place? I did have a little bit to drink, and Dana Point is the actual city. So beyond belief. So if you want to go, I guess fish fries are done until next year now. So no more fish fries, but hey, steak, I can do that one. We're gonna check that out. Cap it all off by getting a dog. Now, if you've been watching us on any of our social channels, did my team do a great job of putting together some graphics and some commentary about our new family edition? Got a lot of comments. I think I saw the name Bentley as one of the dog names. I think I saw Oreo. Can't use Oreo. Oreo is fitting because it is a black and white dog. So Oreo is fitting, but our next door neighbor has a dog named Oreo, so that would not go over too well. What else did we see on there, Josh? There was some really good ones that were on there. I like Bandit. That one was very fitting for me. My wife, I don't know if she's really onto that one. Lola is one of the names that we got on there. So maybe we should do I don't know how to do this, but I know on Instagram you can do a poll, and you can put a poll up that says which dog it's choices, I think is the way it is. So maybe today I'm going to ask our team to go through and take a look and see what do we have, what names came through, and maybe we could find a concept of what we think we should be doing as a name the dog. And obviously, as if you're married, you probably already know this, but I don't really get a vote. My wife will decide the name, but it would be fun for us to see here what names are the most popular names. And it's a little black and white Aussie Doodle, cute little dog. And she's going to get trained by the best. No, me. I'm not very good at it, but I'm going to give it a shot. But we have a bunch of names that have come through, and I want to maybe Josh, can we create a poll for that? Is that possible? Yeah. So maybe we'll do the poll, and if the judge decides that we've got a winner there, that would be my wife. Then maybe I think I've got a $50 gift card to the winery. If you haven't been to the winery, it's a lot better than a fish fry. I can tell you that. It's Newport Beach and Tustin. I think they've got a couple other locations, but I think I've got a $50 gift card in my briefcase that we can give away for that one. So we'll do that. Hey, if you're watching us on RonSiegelRadio.tv, or if you're watching us on any of our socials, we love to have commentary from folks. Go to StreamYard.com/Facebook. And love to interact with you. Love to have you on the broadcast. So, Mr. User, hey, back at you. Glad to see you joining us. And I'd love to have a conversation with you. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, we've got a lot to cover today. Balancing your wants and needs as a home buyer, when to consider a cash-out refinance, medical debt removal from credit reports. Don't wait to refinance or sell before updating homeowners insurance during and after divorce. We've got a lot of stuff here for you today. You can reach me anytime. Our off-air number, it's 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. The Mortgage Minute today, again, brought to you by our friends at Geneva Financial. They got a lot of, I didn't even go through this. I guess I got to talking about the weekend. It was a busy weekend. Maybe I'm still reliving the weekend. Dow Jones Industrial Average down 49 points. The S&P 500 is up 26. The NASDAQ up 228. Oil up $2.32 per barrel. 10-year Treasury up 3 basis points, 2.408. Mortgage-backed securities are down 6 basis points. That means interest rates are on the rise once again. They've been going up pretty steadily. That's we thought that maybe we had the market turning around for us just a little bit. But as always, no matter what you're seeing in the marketplace, you know that your friends at Ron Siegel Radio are going to tell you exactly what's really going on in the market, because we get the mortgage rates from OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. And they're telling us that as of last Friday, this is not an April Fool's, 4.863 is what interest rates were locked at as of last Friday. That's conforming rates. 30-year rates, 3.903. Jumbos, 4.449. Notice the jumbo loan is being priced lower than the 30-year conforming loan. Yeah, that's because the government's not involved in that one as much. 30-year FHA, 4.899 is where those are being locked at. Now, can you get better rates than that? Probably. Can you get worse rates than that? Probably. Because this is the average, right? So when you're looking at the average, you're going to have some that are above, some that are going to be below. They're going to come out at an average number. But really what you want to know is, and you know, a lot of the numbers I give you, you can find on that super secret website, google.com. But one of the things that google.com is not going to tell you, well, they're not going to tell you that OBMMI number that I just gave you, because they don't have that there. It's a paid service that we use. But they don't tell you what's going on. Why are the markets doing what they're doing? And even more importantly, what is on the horizon? So that's going to be some of the interesting things right here. So global economy, it's very interconnected. There are already signs of a potential recession in Europe. The April Eurozone Centix Confidence Index fell to negative 18, and many are saying that we'll look back at the start of Q2, that's where we are right now, as a recession in Europe in retrospect. Again, the sentiment index, not hard data, tells you what people are thinking in Europe. This is important as global economies are interconnected, and rarely do we see recessions in just one country, but rather widespread. Speaking of recessions, the indicators we have been following in the U.S. is the 10-year and 2-year Treasury spread between the two of those. After inverting, yes, that means that they are the wrong way. Generally, it's about 5 to 6 months from that inversion to when the recession is actually here in our country. So, but more data. The NASDAQ's return from inversion to recession the last 5 times was an average of 50%. Removing the 1998 recession, which had an abnormally high return, the average is 17%. Also interesting is that in the 2 months following the recession, the NASDAQ has positive every time for an average of 6.86% return. So while the recessions, we might be headed for a recession, it does not mean panic immediately on our investments. As you can see, gains until the... Now here's the issue. Interest rates drop during a recession, or the mortgage rates, not all interest rates, but mortgage rates drop during a recession. Just historical, I don't guarantee what's going to happen going forward. Why would I even be bringing that up? Well, it's because there are benefits to that. The idea here is the cash out refinance. Big issue. So we're going to talk about that, but that's the Mortgage Minute brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva has the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. Yes, operators are standing by. So when do you want to consider a cash out refinance? That's your Credit Matters segment brought to you by creditsanitizer.com. You have a credit report. It is wrong. Credit Sanitizer has the solutions for you. When do you want to consider a cash out refinance? What is a cash out refinance? It can be a great way to tap some of the equity in your home. However, the costs associated with this type of mortgage loan may give some homeowners pause. If you have a significant amount of equity in your home that you're hoping to use to pay off high interest credit cards, make some home improvements, or just about anything else you can think of, here's what you need to consider about a cash out refinance. So a cash out refinance is a mortgage loan that replaces your existing loan, complete with new terms. Unlike a traditional refinance loan, however, a cash out refinance allows you to take cash out of your home's equity on top of the original loan amount. For example, let's say your home is worth $300,000. That's a national number. I know there's only a few places here in Southern California where you have this. But say your home is worth $300,000. Your mortgage loan balance is currently $100,000. If you're thinking of making some home improvements to your home that'll cost $50,000, you could use a cash out refinance to effectively take that amount from your home's equity. The new loan will combine that $100,000 balance it paid off from the original loan plus $50,000 you took out in cash for a total of $150,000. Lenders typically require that you maintain at least 20% in equity on a $300,000 home. That means your cash out refinance loan cannot exceed $240,000, but that limit can vary by lender. Cash out refinance isn't the only way you can tap your home's equity, though. Here's how it compares to a home equity loan and a home equity line of credit. Cash out refinance loan versus home equity loan. Both of these loans give you a lump sum amount up front, which you'll pay off over a set period, determined by you and your lender. That said, a cash out refinance loan is primarily a primary mortgage loan, which means that you're only borrowing money from one lender. With a home equity loan, you're taking out a second mortgage from a lender that may not be the same as the one that services your primary mortgage. Instead of one monthly payment, you will have two. Additionally, home equity loans are referred to as subordinate loans. This means that if you can't make your payments and the original lender forecloses on the home equity lender only gets paid if there's enough money left over after the original lender sells the home and recoups its loan balance, interest, and fees. As a result, home equity loan interest rates tend to be a bit higher. That said, closing costs on a home equity loan are only applied to the amount you're taking out of your equity, whereas With a cash out refinance, you're paying closing costs based on the cash portion and the original loan amount. Some home equity lenders may not charge closing costs at all. Cash out refinance versus HELOC. With a cash out refinance, you're getting a lump sum that you can pay back over time. In contrast, a HELOC, home equity line of credit, gives you revolving line of credit that you can use, pay off, and repeat, similar to the arrangement you have with your credit card companies. A HELOC can be worth considering if you want access to funds over a long period of time rather than all at once. You'll have a draw period during which you can take withdrawals for anything you want and pay only interest on what you've borrowed. After that, the repayment period kicks in, during which you'll make regular monthly payments over a set period on whatever balance remains from your draw period. Another key difference between the two options is that cash out refinance loans can come with fixed or adjustable interest rate, while HELOC interest rates are almost always variable. This means that the rate will fluctuate along with markets and can ultimately cost you more money. HELOCs may also come with an annual fee, but some don't charge closing costs, giving you fewer upfront expenses. Like home equity lines, HELOCs are subordinated loans, so they may come with higher interest rates than a cash out refinance. Here's the issue. Right now, the Federal Reserve does not have an influence on mortgage loans. The mortgage-backed securities are what determines the interest or the payments on the cash-out refinance. Cash-out refinances are always more expensive than a rate and term refinance or a purchase money loan. The interest rates are higher on the cash-out. So what do we want to consider about that then? Well, if you've got a home equity line, as the Federal Reserve increases their discount rate, prime rate goes up, your margin stays the same on your home equity line, but margins are added to the index. The index is usually prime. Prime goes up. That means your payments go up. So the other part of that is, if you've got taking a cash out refinance now, you get rid of that home equity line of credit. You get rid of the debts that make sense to get rid of. And we have a blended rate calculator that we use to identify that for you. You get rid of those debts. And then you have a strategy that when rates drop which they normally do, during a recession, it's going to take a look and say, maybe I can restructure that cash out refinance to save even more money. So what are the pros and cons of that cash out refinance? Pros, again, lower interest rate. Generally, you'll get a lower interest rate on a cash out refinance compared to home equity loan or a home equity line of credit. You've got access to funds and simplicity. Downside, potential for a higher monthly payment right now. Closing costs, yeah, you got to pay them. I know some people are out there saying, well, we'll just build them into the loan. Okay, but you're still paying them. Potential for private mortgage insurance. How a cash out refinance impacts your FICO score. Well, you're going to get a credit inquiry. You're going to get a loan payoff. You're going to have a new loan. You're going to have more debt. More often than not, you're going to see that it's going to help your FICO scores. And as always, I use myfico.com. Myfico.com is the source of where we watch credit all the time. Again, it's all about the planning. That is the Your Credit Matters segment, again, brought to you by creditsanitizer.com. You have a credit report. It is wrong. What are you doing about it? When we come back, balancing your wants and needs as a home buyer today, medical debt removal is going to have a big impact. And don't wait to refinance or sell before updating homeowners insurance during a divorce. All that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio. Or anytime at 800-306-1990, 800-306-1990. Always nice to see local professionals joining our radio broadcast. Looks like our friend Dave Silva's there. You still with us, Dave? I hope you're there. I think he goes by Mr. Orange. Great real estate professional in North Orange County. So if you're looking for a great professional, Dave Silva, glad to have you joining in on the broadcast, the real-time real estate segment, brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com. rsrhomescout.com. I think, did I take that down or did you take some? Josh has got it down. Thank you. rsrhomescout.com. Got all the information you can possibly want. If you're thinking about buying real estate, RSR Home Scout, you can actually get a feed of all of the different properties available for sale. About 97% of the country is covered under RSR Home Scout. You can set up your parameters so that you're getting notified all the time of what's new in the marketplace. No advertising. You can check on the value of your existing property there. So it's got a lot of great information on there. And it's a gift to you from your friends at Ron Siegel Radio. Love giving away stuff. It's one of the things that we enjoy the most is just giving things away whenever we can. Did somebody say give things away? How about the Home Buyer's Guide, rsrhbg.com? Just came out, rsrhbg.com. We've got our spring version. If you're thinking about selling your house, rsrhsg.com. It's got both of those. They're out in the marketplace. Balancing your wants and needs as a home buyer today. Since the number of homes for sale is low today, it can feel challenging to find one that checks all your boxes. But if you know which features are absolutely essential in your next home and which ones are just nice bonuses, you can land a home that fits your needs. Danielle Hale, chief economist for Realtor.com, explains it like this, quote, focus on the goal you set out for yourself, like your list of must-haves and nice-to-haves and your budget. Stick to that. Be persistent, unquote. And I'm going to share with you, if you find the property that has all of your must-haves and some of your nice-to-haves, that's one you might want to jump on if it fits your payment. So how do you go about creating your list of desired features? The first step is to get pre-approved, actually pre-underwritten for your mortgage. Pre-underwriting helps you better understand your budget, and that plays an important role in how you'll craft your list. After all, you don't want to fall in love with a home that's too far out of reach. Once you have a good grasp of your budget, you can begin to list all of the features of a home you would like. Here's a great way to think about them before you begin. Must-haves. If a house doesn't have these features, it won't work for you and your lifestyle, like distance from work. I might say that I need to have a house close to my studio, and I might find the exact right house in Las Vegas. Not going to work. The commute's a little long for me. I just throw that out there. How many bathrooms? How many bedrooms? Sometimes you want less bathrooms or some less bedrooms, right? I mean, I went from a 4-bedroom house to a 3-bedroom house. That means it just can't have somebody stay over. Might be good. Nice to haves. These are features that you'd love to have but can live without. Nice to haves are not deal breakers, but if you find a home that hits all of the must haves and some of these, it's a contender. Examples: second home office, a pool, white picket fence. Dream state, this is where you can really think big. Again, these are features that you'll need, but if you find a home that has all the must-haves, most of the nice-to-haves, and any of these, it's a winner. Example, farmhouse sink, multiple walk-in closets, that kind of stuff. Finally, once you've created your list and categorized it in a way that works for you, discuss it with your real estate professional. They'll be able to help you define the list further or refine the list further, coach you through the best way to stick to it, and to find a home in your area that meets your needs. Bottom line, crafting your home search checklist may seem like a small task, but if you can save time and money, it's also one of the keys to being successful in today's competitive market. Let's chat. I'm a big believer, unless you're just trying for hobby time. Hobby time is one thing, go out and check out properties on the hobbies. But here's the issue is, if you're serious about buying a house, do you want to spend a lot of or waste a lot of time? I'm not a fan of the wasting time portion. So do some of this homework up front with your professional. The must-haves, the nice-to-haves, the dream list, the payment. Have all of that stuff done, and then you can either go with your agent finding the properties, or like I said, rsrhomescout.com. You can actually start looking and refining your search right there. And then when you get that great agent to go with you, you've got a little better handle on what you can afford and where you can afford. Because quite frankly, you don't need a real estate professional to help you find that house. Your need of the real estate professional is to get you into the contract, help you with the valuations, what the competition is on and off the market, and then help negotiate all the terms of that contract. And that goes on all the way from contract until close. You're paying for their years and years and years of experience. So if you go and find an agent that's done one transaction in their lifetime, not a bad person. Everybody starts out with one, but who's their mentor? Who are they working with? Who's helping them with these things? Ask those questions. That's what you really want to know about it. So that's the Real-Time Real Estate segment, brought to you by rsrhomescout.com, rsrhomescout.com. Better Outcomes segment today, brought to you by mycdlp.com, mycdlp.com. Don't wait to refinance or sell before updating homeowners insurance during and after divorce. As divorce mortgage planners, we regularly see divorcing homeowners not updating their insurance policy until later. For example, they may wait until they refinance the marital home mortgage, or when only one spouse remains in the marital home, until selling the house at a date in the future. Commonly with a divorce, if the parties are thinking about insurance, it might be concerning a life insurance policy or an auto policy. But homeowners insurance should be a priority. Becoming recently separated or divorced is a challenging time for couples. Policyholders need to know how divorce can impact a current or future property insurance damage claim. Understanding the necessary steps in updating your insurance coverages will help reassure you that all assets are adequately protected. The homeowner's insurance policy is directly related to the deed to the property. Therefore, if both spouses' names are on the deed, you can't simply remove one spouse's name from the insurance policy. So, for example, if you and your spouse are divorcing and one spouse is keeping the home, the other will need to sign a quitclaim so the deed to the house can be reissued in the sole owner's name. This action then allows the existing insurance policyholders to be updated to reflect the current homeowner properly. The issue of a resident spouse involves the husband or wife of a party who is the sole legal owner of the home. Some insurers list the spouse as a named insured, even though the spouse's name does not appear on the deed. Resident spouse is a term that does not name the person and requires the spouse to live in the home to be insured. Your particular insurance needs depend in part on who you live with and your relationship with them. Therefore, most changes to your relationship status will warrant an insurance policy update. Each state has its Department of Insurance with state-specific insurance rules, so check with your state's department and your insurer for requirements unique to your state. For residential policies in some states, a spouse may have an interest in an insurance claim. Whether or not both spouses are named explicitly on the insurance policy, residential policies may provide married couples coverage. For example, standard language may read something like, in this policy, you and you are referred to the name insured, shown in the declarations, and the spouse if a resident of the same household. Awareness concerning the requirements for a married couple or one married person to bring a claim under the policy is something policyholders and public adjusters should be considering during the claim process, even if the couple is not contemplating separation or divorce. For instance, these considerations are essential for complying with post-loss conditions for proof of loss and the examination under oath requirement. It is also not uncommon for a loss to happen when a couple is in the process of divorce, newly divorced, or separated. There may be a circumstance where the couple decides to end the marriage in the middle of the claim. Unfortunately, a long and arduous claim process can impact relationships. Those who either have a claim or represent claimants need to know how a change in marital status can affect an insurance claim. When a divorce happens before a loss, the Morgan 1 case shows how one couple lost their marriage and insurance coverage. Dorothy and James Morgan were a married couple living in Florida, and while the Morgans were still married, Dorothy Morgan purchased insurance on their home from American Security. The policy was issued November 3rd, 1981, and provided that the term quote-unquote insured included the named insured, Dorothy L. Morgan, and any relative residing in the household. The definitional section provided that throughout the policy, quote-unquote, you and your refer to the named insured in the declarations and the spouse if a resident of the same household. Shortly thereafter, the Morgans entered into a separation agreement, and Dorothy quit-claimed her interest in the house to her husband, as she was required to do by the agreement. The Morgans divorced on August 26, 1982. On November 28, 1982, the house was destroyed by fire. When the Morgans sought to recover on Dorothy Morgan's insurance policy, American Security refused to pay, and this suit followed. American Securities argued it did not have to pay the claim because Mrs. Morgan had no insurable interest in the property at the time of the loss. After all, she transferred her interest via the quitclaim deed to Mr. Morgan. Further, Mr. Morgan was not an insured under the policy because he was not a spouse or relative of Dorothy Morgan's residing in the home at the time of the loss. This trial court agreed with American Security, and after an appeal, the Court of Appeal affirmed the ruling, explaining insurance is considered a personal contract, and the hazard the insurance company elects to assume run to the individual rather than upon the property. Therefore, there may be no coverage if the insured parts with all interest in the property before the loss. There may be a window of opportunity for elapsing coverage during a divorce. For example, when one spouse is awarded the marital home and cannot refinance the existing mortgage into their name until a later date, often they wait until the time of refinancing to execute a quitclaim deed and update homeowners insurance. Another example, maybe when the divorcing couple decides to sell the property later and one spouse remains in the home without amending the insurance policy. Divorce and property division can be complex and further complicated by loss and damage to property. Both policyholders and their divorce team should be mindful of how challenging residences and deeding property can potentially impact both parties. Unfortunately, a property insurance may take low priority for separation or divorce. Still, a property damage claim can be another devastating loss when property actions are overlooked. Divorce mortgage planning is a holistic approach to the process of evaluating mortgage options in the context of the overall financial objectives as they relate to divorcing situations. As a divorce mortgage planner, a CDLP can help you identify any potential conflicts between the divorce settlement, financial planning, and home equity solutions, as well as any real property issues involved in your case. I'm going to share with you the Divorce Your Mortgage Workbook, mydymworkbook.com. mydymworkbook.com. Get a copy of that as soon as you make that decision to separate. Great resource. As always, I'm not giving you legal advice here. I'm not an insurance agent. You need to check with those people to help you on that part. That's the Better Outcome segment, brought to you by mycdlp.com. mycdlp.com. Hi, Alex is with us. Glad to see you with us, Alex. We still got a lot to do today, and I'm running over as I generally do. You can reach me anytime off air, number 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. How to buy a home in an extreme seller's market. That is our question today in the real-time real estate segment, brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomedigest.com, rsrhomescout.com, rsrhomescout.com. I've been using, we still have RSR Home Digest. It's still a great tool. So I'm just going to share that one with you and tell you that both of them are great. RSR Home Scout, though, is our go-to. Home buying activity has certainly been hot over the past few years. In spite of being in the middle of a pandemic, it will likely just get hotter as the spring buying season approaches. Even as home prices and mortgage rates steadily rise, buyers are not sitting out. So we're going to chat a little bit about strategies you can use in a competitive market. The first thing you should know is that you are entering a seller's market. This means that you're not likely to cut a deal or get discounts. Sometimes, even if the home needs major repairs, that's because supply is severely lagging demand. It's crucial to sharpen your home buying tools if you want to compete successfully. Here are top buying strategies. Number one, get a mortgage pre-underwrite. I know a lot of people talk about pre-approval. That's old news. Pre-underwrite. That means you're going to go through the entire process with the lender. You're going to get underwritten completely. That means that an underwriter has already signed off on the loan. They have a condition there for your appraisal and for title insurance. Various methods sellers can use to snag a home in today's market. The one resounding rule all experts agreed on is getting that. They talk about a pre-approval. I say the pre-underwrite because you can go in looking same as cash. The sellers know about your finances and your credit worthiness. Number two, look for homes under your budget. Tales of multiple, sometimes dozens of bidders on one home are not unusual. This is real life in housing markets across the U.S. For buyers, that means you probably shouldn't look for homes at the top of your budget, as you can count on someone else outbidding you. Just be sure this is true for your area. If you're serious about buying a home now, a good strategy is to search for homes below your spending limit. This way you have room to bid up without dipping into savings or going outside of your target price point. We talk a lot about buying down the interest rate. That can help expand the purchase price that you can afford, because when we're looking as a lender, when we look at the affordability of a property, we really don't care what the price of the property is. We look at your debt to income ratio, how much money you make versus what the cost is. That would be your principal, interest, taxes, insurance, HOA, if there is one, the homeowners association, and what your other debts are. So if you can buy down the interest rate or get the seller to buy down the interest rate, you can benefit there. Number 3, give yourself extra time. It's not uncommon for first-time home buyers to borrow money to make a down payment. However, this should be factored into your timeline. Again, talk to your lender about any funds you expect to receive so they can walk you through the process. For example, if someone is giving you money for the down payment, they'll have to write a gift letter explaining that you do not have to repay the money. Number 4, get the best real estate agent possible. An excellent real estate agent is every buyer's secret weapon. They're not only great negotiators and have a solid understanding of the neighborhood you're interested in, but they also have terrific connections, which will benefit you. I know many, many real estate professionals that say, all things being equal, if I know the agent on the other side, they've got a benefit there because I know their quality, their workmanship. I know that what they say is going to happen. Number 5, expand your search. The most sought after neighborhoods come with the highest price tags. If you have your heart set on owning a home and living in a specific but out of budget neighborhood, you might have to choose between them. For those who opt for home ownership over a coveted zip code, that means looking in other areas. Start by identifying what you like about your dream neighborhood. Are there local restaurants and businesses nearby? Are there green spaces? Is it near public transportation? Whatever features you value, try to find them in areas you might not have explored before. Finding a home in an extreme market can be overwhelming, but you put together a talented team of professional real estate agents and lender combined with top-notch agent and lender, you'll make it much easier to accomplish your goal. Give us a call. We're more than happy to help you. We put you in touch with great real estate professionals anywhere within the sound of our voice. That is the Real-Time Real Estate segment, again, brought to you by rsrhomescout.com, rsrhomescout.com. I think I had one other that I wanted to share with you today. And there it is. How soon can you refi after buying a home? That's really important. Again, that's Real-Time Real Estate segment brought to you by rsrhomescout.com, rsrhomescout.com. So we've talked before about strategies, and strategies are more important in markets like this where interest rates are rising dramatically, recession on the horizon. So you've got these strategies. Then you ask, okay, how soon can you buy after a refi? How soon can you refi after you buy a home? Kind of goes a similar pattern as to how soon can you refi after doing a cash out refi or a debt consolidation. Maybe you just bought a home or recently refinanced your existing home and you're wondering how soon is too soon to refinance. For most loan programs, you'll need to wait at least 6 months before you refinance into a new loan, but there are some loan programs that will allow you to refinance into a new home loan with absolutely no waiting period. It's important to know the difference, and we're going to talk about that right now, what you need to know about refinancing your home loan. If you have a conventional mortgage, you can typically refinance into a lower interest rate as soon as you want to. However, you'll have to wait 6 months if you want cash back. Keep in mind, many lenders have a 6-month seasoning period before a current borrower can refinance with the same company, so you'll likely have to wait if you want to refinance with the lender you're already using. While it's rare, some lenders charge a prepayment penalty that could derail your refinance plans. Check to see if your current loan has a prepayment penalty clause before moving forward. Not a lot of them do right now, but there are some. If you're hoping to take cash out, you'll typically have to wait 6 months before refinancing, regardless of the type of home loan you have. In addition, a cash out refinance usually requires you to have at least 20% equity in the home. So before you can use a cash out refinance, You need to be sure you've built up enough home equity to make one worthwhile. If you made a large down payment, you may already have enough home equity to qualify. Government loan refinances. These rules are a little bit different if you have a government-backed loan. That's FHA, USDA, and VA loans. With a government loan, you have the benefit of being able to use a streamline refinance. Streamline refinancing, such as FHA Streamline or VA IRRL programs, cuts down the time and paperwork associated with a refi so you can get a lower rate faster. However, you have to wait 6 months before using a streamlined refinance to replace your original mortgage, and you must have a recent history of on-time mortgage payments. When is refinance worth it? Dropping your rate with no associated costs makes this decision to refinance an easy one. And another reason to refinance is that you can lower your monthly payment. That may mean your mortgage payment, or it could be your household debt payment. We can figure that out for you. Refinancing sooner versus later can also be a good strategy if you want to take cash out to pay for something big like home improvements, want to use equity or debt consolidation, paying off high interest credit cards or personal loans, want to switch from an adjustable rate mortgage to a safer fixed rate mortgage, need to take a partner off your loan due to a recent separation, have an FHA loan which requires mortgage insurance premiums, and you want to eliminate those extra payments. A conventional won't require private mortgage insurance if you have at least 20% equity in your home. Have seen a boost in your credit score recently, you may qualify for an even lower refinance rate with a higher credit score. Yes, you could save money by getting lower monthly payments with a refinance, but a mortgage refinance loan can also help you with bigger picture financial goals. It's important to work with a state licensed mortgage professional who can help you create a real estate financial plan. That is exactly what our team does at the Siegel Lending Team. That is the real-time real estate segment brought to you by rsrhomescout.com, rsrhomescout.com. And as always, I ask you, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.